What is most concerning for you in terms of Nigeria's outlook economically this year?
Okay. I think there is no single factor that is most concerning. There are a lot of factors that will go, into how the economy will come out at the end of the year. So for us, in Q1, we know the biggest news is still the elections. So, and we've seen, since H2 2018, you've seen a situation where investors have been concerned about, the risk environment in Nigeria, and this affects, the direction of economic policy. So if the economic policy of Nigeria is unclear, then you do not expect investors to bring their money into the country. Then you want to balance this with external factors. So the IMF, the World Bank, they are all projecting slower global momentum, and this is because advanced economies are increasing interest rates, so they expect financial conditions to be tighter. And also in China and the US, you see the trade tensions, although there's a ceasefire of 90 days now. So at the end of February, we have more clarity on the direction of global trade. So when you think in terms of 2019, it's really about the elections, the outcome of the elections, then in terms of how we can balance global, risk factors to our domestic situation.
But there's a view as well that regardless of the outcome of the elections, the fiscal situation of Nigeria is more concerning now than it was 4 years ago. And indeed, there is a concern that the cycle of increased borrowing is likely to continue simply because government revenues continue to be challenged in the context of the expenditure. What are your thoughts on that?
Okay, the fiscal challenges of government, they've been in place since 2014, and we believe it's obviously a bad thing for growth, because if government cannot deliver, adequate public services and social services or public goods, it's very bad for the economy. So in 2019, we'll see that play out again. In 2018, based on our estimates in 2018, government is still, spending about over 60% of its revenue on debt service, and still you expect that the aggressive nature of borrowing that started in 2016 will persist into 2019 because revenues are still underperforming. And the really big issue around revenues is that when you look at tax revenues to GDP, it's still very, very weak compared to what you have in Kenya or in South Africa or even in neighboring Ghana. So for government, it's a big challenge that revenues will continue to underperform, and that will continue to restrict the kind of impact you expect the government to have on the economy. Now, for a lot of, when you look at the campaigns and around the elections, you see that most of the candidates, especially the leading candidates of APC and the PDP, you see that they've not really been it has not really been debated as much. It's just as if they do not understand the gravity of the situation yet. So in 2019, we expect that it to be a very, very big factor.
Right. And grave is a very interesting way to put it, but perhaps that is the reality when you look at the expenditure versus the revenues. But in terms of the investment environment, let's talk about that a little bit. So the interest rate environment is likely to remain tight. Mm-hmm. I think that is expected, yes, especially when you expect currency weakness. Mm-hmm. But between interest rate and exchange rate environment, can you just give us your expectations about how things are likely to play out?
In 2019, for interest rates, we expect the CBN to maintain its monetary policy rate at 14%, and this is because of let's say 2 or 3 factors. Number one is the fact that when you look at the pace of interest rate rises in advanced economies, investors are not, when you adjust Nigeria returns for risk, CBN will want to compensate them for the risk of investing in Nigeria. So they will want to keep the policy rate tight to continue to attract investors. And this is also attached to the desire to maintain exchange rate stability. Also, you expect that inflation would also be at double-digit levels. Based on our estimates for the year, we are estimating around 11% average through 2019, and this is because we still have food supply challenges in the middle belt. So insecurity, we've not yet dealt with the situation adequately. So you expect the agri output to remain very weak. If agri output is weak, that means domestic food prices will remain elevated. And food is a major component of the inflation basket. So when you look at inflation, to the direction of inflation is going to be double digits throughout the year. So when you look at external factors to domestic price pressures, you expect that the interest rate will remain stable at 14%. For exchange rate policy, also, it's also very connected to global developments. We know reserves around $43 billion now. This is good, but when you think in terms of the coverage of imports we have, you see that it has reduced from about 15 months to around 7, 8, 9 months now that we have in January. Last year, it was around 15 months. At this same time around last year. So the extent to which our reserves can actually cover our imports is reducing, and that shows that, well, you continue to see pressures. So the pressures have manifested since Q4, where you see rates spiking in the I&E FX window, where you see rates spiking also in the parallel market. So you expect that we expect to see more of that in 2019. Now, we think that in the first half of the year, the CBN, has enough firepower in the reserves to continue to, defend the currency and maintain exchange rate stability. But in the latter part of the year, if, the anticipated increases in interest rates occur in the U.S. and depending on, issues around Brexit, so if there's if they can get a very favorable deal, you expect that also the interest rate environment might not remain as loose as you expect it to be. And also in EU, you see that they've stopped quantitative easing. So if all these factors come to play in in the second half of the year, you expect that there will be pressures, and we may likely see a devaluation in the exchange rate. So
what are
we are currently looking at around 400 by the end of the year. But we also know we're going to have a new CBN governor. So coming around June 2019, so a lot around, policy rates, monetary policy as a whole would depend on the new CBN governor we have.
Right, so we have new